Hello and welcome back to the channel. Today we will discuss about the meaning of international transactions in transfer pricing. Before proceeding to the meaning of international transactions, let us first understand the meaning of transfer pricing in brief. Transfer pricing pertains to the pricing policy used when goods or services are transferred between affiliated businesses. The goal of transfer pricing law is to make sure that transactions between associated enterprises do not occur at an unreasonably favorable and controlled prices. The primary goal of transfer pricing legislation in international transactions is to help make sure that transactions between related enterprises are not carried out at the same price as if they were carried out between the unrelated parties. Let us now understand the meaning of international transactions. An international transaction is defined as a transaction between two or more associated enterprises, one or both of which are non-residents, in which tangible or intangible property is purchased, sold or leased, services are provided, or money is lent or borrowed. The concept of international transactions is broad, with each transaction that is entered between related enterprises being classified as an international transaction. The main requirement for such transactions to be classified as international transactions is that at least one of the participants to the transaction has to be a non-resident. The definition of the international transaction was expanded in the Finance Act of 2012 with retrospective effect from 1st April 2002. Following transactions are regarded as international transactions under transfer pricing. Section 92B states that transactions between related enterprises involving the acquisition, sale or lease of tangible or intangible property are regarded as international transactions for the purposes of transfer pricing requirements. Secondly, the transaction of provision of services between two or more related firms is included in the definition of international transaction. For example, the provision of market analysis, marketing strategy, marketing management, administration, technical services, repairs, designing, consulting agencies, scientific research, legal or accounting services are all included within it. Thirdly, enterprises in a group that engage in financial transactions such as lending or borrowing of money, offering guarantees and so on. Because such transactions have an impact on the enterprise's revenues and losses, they are classified as international transactions. The definition of international transaction to expressly embrace a variety of capital financing activities such as guarantee, acquisition, or sale of marketable securities, or any sort of advance payment or deferred payment or receivable and any other debt. Fourthly, the business restructuring involves cross-border transfers of valuable intangible assets or a significant renegotiation of current agreements. The transactions of business restructuring and reorganization transactions are covered within the meaning of international transactions. Fifthly, any other transaction that has a bearing on profits, earnings, income, losses, and assets of an enterprise. These transactions could include reimbursement transactions or transactions that do not incur any charges, that is, free of cost services or goods. Previously, affiliated firms would use an unrelated third party to operate as an intermediary, and transactions would be routed through such an unrelated company to avoid transfer pricing rules. In 2014, the Indian Transfer Pricing Regulations introduced a deeming fiction under which transactions between unrelated firms are treated as international transactions between connected enterprises if the following two conditions are met. 1. There is a prior agreement in place between such other person and related enterprise in connection to the relevant transaction, or the conditions of the relevant transaction are established in essence between such other person and the related enterprise if the entity or the associated enterprise or both of them are non-residents, regardless of whether such other person is a non-resident or not. Every participant who has entered into an international transaction must keep and maintain specific information and papers in that regard. It should be noted that failure to keep and maintain such documentation would result in a fine of up to 2% of the value of any such foreign or international transaction. Associated firms that engage in international transactions must ensure that the transactions are conducted at arm's length price as if they were taking place between an unrelated and independent parties in an uncontrolled manner. If such an arm's length pricing is not secured and appropriate documentation is not kept, then in that case, modifications and fines can also be imposed. Thank you. For more such information, please like, share and subscribe to the channel.